Hello and welcome to the Efficient Private Podcast. As we kick off Season 2, we continue to delve into the intricacies of the financial planning environment and bring you our market and economic expertise. The next few weeks, we'll be looking at cryptocurrencies. What are they? Where do they fit in? I am Pape, an investment specialist with Efficient Private Clients, and we're joined in studio by Dr. Francois Stofberg. Francois, where do we start with cryptocurrencies? Can we unpack them from the basics?
Yeah, I think it's better that we start at the very beginning, as our favorite song from What's It Sound of Music says. Yeah. Start at the very beginning. So, what was it? 2008 when this all started. Mm-hmm. When
just after the financial crisis,
some clever guy wrote a white paper and created in effect this new digital token. I don't know, no one actually knew what it was. People started mining it.
Correct, yeah.
People started mining it, and then 2010 the first transaction was done where someone bought, I think it's Philadelphia or Florida, they bought pizzas, which would now equate to something of paying more or less $600 million for those two pizzas.
Yeah.
So those were expensive pizzas.
Very.
So yes, I think there's a lot can be said in terms of exactly what the philosophy is behind Bitcoin. I don't think we have to go into that too much detail yet. But where it becomes interesting for us is to understand that this is we don't know what it is exactly. It seems like it wants to position itself as an asset of types. I think it's important to note that there are different cryptocurrencies. It's not one, and they are not all currencies.
No,
that's important.
They also have different utilities.
That's exactly it. So some of them are used as a smart currency. Some of them will be used to replace the SWIFT banking system, like XRP. That's what they've been trying to do. Some of them will be a store of value, like gold, which is Bitcoin, the gold standard, as they say. Some of them will be the new infrastructure on which the Web3 will be built.
Yes.
Some of them will be what they refer to layer 1. So it's the infrastructure that's needed to facilitate all other types of smart contracts, as an example, on which then you get non-fungible tokens, NFTs. So the art, as an example, and NFTs can also be used to replace certain contracts that we have. If you buy and sell a house, the tedious paperwork involved with that. Yes. That can now be on an open blockchain or an NFT where everybody has access to it. It's completely transparent. There's no leakages. Nothing can be stolen. You can't lose your pink slip of your car. Yes. Everything is authorized, and who gets authority and all that. And it's a very clearer, much more cost-efficient system. A lot more cost-efficient system. It should increase the transactionability of many things, and that can help economic activity once again. So, I think there's a lot to unpack. I think the questions that we get a lot is that is this something that we should invest in? And to that extent, you have to kind of understand: is it now asset class? Is it a currency? Is it something that I just keep in my pockets? So, 2008, I think what the big uptake was back then is there was a deterioration in trust towards institutions. Remember, that was the great global financial crisis, and people were very upset that something like that was allowed to have happened. Yes. And now we have inflation, and that's another thing that people are very disillusioned about now, because you understand that it's deteriorating your buying power. So if you have cash, even dollars now, you're losing money because inflation is higher than the typical rate that you can get from a bank deposit, even in the US. South Africa, maybe not, because you can get good bank deposits now, but globally, there's this, for how long? There's this thing about people are tired of the man. The institution, the government. So that's why you saw this great big uptake in a private currency or a private asset class. Something independent, and that's very important specifically about Bitcoin, is it's decentralized, so no one actually owns it. The owners own it. And
when they talk decentralization, is it institutional government or mix of both when they want it to be separate from the man?
Yeah, well, it depends on who's the majority owner. So you need the majority shares, the majority ownership in the Bitcoin chain of all the Bitcoins, and then you can enforce certain changes. But the good thing about Bitcoin is no one owns it.
Yes.
No one person owns it. There are a couple of, there's many rumors now, speculations, let's not go into that, about a couple of handful venture capital firms or large banks own it like they own everything.
Yes.
But yeah, except from some speculation, it's not really owned by anyone. So it is a private security. It gives you a lot of anonymity. We'll speak about that. Well, actually not anonymity, I don't think that's necessarily the word. It gives you a lot of power for yourself.
Yes.
So power to the individual, freedom of expression, and really plays into the narrative of what you've seen unfold psychologically amongst the new generations, not just the Gen Alphas, Gen Zs, Gen Xs, and all these individuals. So it's really playing into it, and that's quite important, because the mistake that people make is to try and put a finger on, is this something I should invest in? Is this it? Is cryptocurrencies, and what am I buying? So if you buy a stock,
yes,
you buy future cash flows discounted at a specific rate. So you buy something, you buy future cash flows. If you buy a bond, you're buying yield. If you're buying a fixed income product, you're buying interest.
Yes.
That you're getting. That's actually what you're buying. But when you buy a cryptocurrency or cryptos, or we can use Bitcoin, it's an easy example. What are you buying? You're not buying future cash flows. Now, how I try to explain it best is that you are buying utility.
Yes.
Now, utility is a economic principle. It means the joy or pleasure you derive from using something. So if I use my phone, I get some utility. If I eat a chocolate, my wife would tell me that she gets a lot of utility,
yes,
a lot of pleasure from eating that chocolate.
And therefore it has a value.
Exactly. So the utility determines the price, which determines in the market that we live in, price determines value. Shouldn't be like that, but that's a conversation for another day. But utility determines value. So it's more like a product or a service that has appreciative values. That's what cryptocurrencies. There is utility. There is use case as well, and then different cryptocurrencies or cryptos, they have different utilities, as we've just said. So Bitcoin, store of value, can be a hedge against inflation, can be another gold, a digital gold if you want, and then the utility, the use that I derive from it is different from the use that you derive from it. But as long as there is a willing buyer and willing seller, which there are millions of, some put the estimates 100 million plus of, then it really kind of solidifies the use case, at least for a cryptocurrency. Now, the other argument that I like to narrate is that if there was a company that's been around for 15 years, which is now 2008 to 2000. If there was a company that's been around for 15 years under immense public scrutiny, and despite that, just continues to produce results, to give utility, to create demand, would you trust that company?
Yeah, you probably would. Or you'd want to investigate further to find out.
You'd at least want to investigate further. But the thing is, so when you start a company in 2008, you start a company, you have 2 people using it. 2010 is your first transaction, and then the amount of people who use it, who derive utility from it, increases to 100 million plus.
Yes.
I mean, now you're already larger than the largest company in South Africa. Well, maybe not Naspers because they have Chinese consumers as well, but I mean everyone else in South Africa. Quality, strong, good companies. And well, for that extent, any other local-based company. 100 million consumers, 100 million users. I mean, if that isn't the stamp of approval, then what is?
Yeah.
So the company, Bitcoin, is not a company, but the idea, the asset, the utility has been around for a long time. It's been under immense public scrutiny, and the utility, the use case, keeps on writing itself, keeps on improving, keeps on growing. So in terms of use, yes, there is probably use. In terms of how it fits into a portfolio, I think that's another discussion. What I can say, at least to start us off with that, is that you have to understand risk and reward. So the reward side, I think, is interesting. The risk side is a conversation about what is your individual risk. Is there institutional risk, like we always say? If it's something like Bitcoin, there's less institutional risk, but then once again, because of a lack of regulation, there is a little bit more systemic risk.
So we've seen scams in that space as well.
Exactly.
When we talk on risk.
Exactly.